All right, welcome back to Fast. We've got some breaking news on both AIG and Blackstone. They are in a tie-up, and both stocks on the move higher right now. Let's get more details with Christina Partsenevelos. Christina.
Thank you. So this is a multi-billion-dollar deal for private equity firm Blackstone to acquire roughly a 9.9% equity stake in AIG's life and retirement business. And it also gives Blackstone a major foothold into the life insurance industry. Blackstone will enter into a long-term agreement to manage an initial $50 billion in assets. Also announced in the deal, Blackstone's non-traded real estate investment trust also struck the option to buy $5.1 billion of U.S. affordable housing assets that AIG has held on its book for actually decades, but said that it's not core to its operation. So this is the news that's coming out just within the last hour. AIG stock, as we saw, rallied about 6%, and shares of Blackstone up just above 3% in aftermarket trading. Back to you, Brian.
All right, Christina, thank you very much. Might have some headlines there for Worldwide Exchange Guy Adami, 5 a.m. Eastern time. That aside, your take on this and both moves in those stocks.
Might be an RBI for you tomorrow, Brian. Who knows? I mean, not that I'm trying to produce your great show that does air at 5 a.m. We've been pretty bullish in Blackstone for quite some time. Christina mentioned it gives them a foothold. It also gives them potentially $95 billion to manage over the next 6 years or so. And this just gets them into one more vertical. They are dominating the financial space, not the bank space, as Dan pointed out to me a couple weeks ago, but just in terms of financials that fall under the radar screen or don't get on the radar screen. This move now in the after hours puts it at a new all-time high. They report, I believe, on the 22nd. People will knock them on valuation. They're making a mistake. Blackstone is inserting themselves into all the profitable business right now. Now a foothold in the insurance business as well. Good for them.
All right, there you go, Guy. And I'm blowing you kisses from here, by the way, Guy. Thank you. All right, one up, one down. That is pretty much the 10-second headline of the two bank earnings today. Bank of America, bit of a bust, stock down 2.5%, warning low rates putting pressure on revenue. But on the flip side, you got Wells Fargo. Nice intraday move higher, though kind of mostly on news of a potential big add to its $18 billion buyback. You got Morgan Stanley out tomorrow. Karen, you're long Wells, you're long Bank of America, you're long Morgan Stanley. They're similar but very different. Your take on what you heard today and what you want to hear tomorrow.
Yeah, and I'm long Citi and I'm long JP Morgan. By the way, I got to say kudos to Guy. He's been on the Blackstone thing for, 60, 70 points, maybe more. So that's been the great way to play it. But to me, I guess, the Wells Fargo thing, the bar was sort of lower for them in some ways. And so the buyback was very good. I think Bank of America was a little disappointing. I think what they're all facing is all the CEOs seem to be very optimistic about the economy, about the reopening of the economy, and optimistic about loan growth. However, it hasn't happened yet. And while they've been waiting, net interest margins have actually gotten even a little tighter. And they've had a lot of deposits. So they might have more net interest income because their balance sheets are bigger. But the net interest margins are actually somewhat under pressure, and that's what bank investors focus on. I focus on that as well. But, it was sort of a quarter. It wasn't great for Bank of America. Similar refrain from a lot of them about, trading revenues weren't as robust, but investment banking revenues were fantastic. And Citi, the one thing that's disappointing today was their talk about investing more, so expenses going up. But I'm really, I want to give them the benefit of the doubt. If they're finding good things to spend money on, they should. Yeah. Mike Mayo on the call was trying to convince them to spend money on buybacks because that is the single best thing they can do. They hear you. They are buying back, but they can and they will, which we all know. So I don't know. It's sort of a mixed bag of blah. We need some loan growth.
Well, look at Wells Fargo. If the other CEOs sit and look at Wells Fargo popping 4% intraday on numbers, to your point, but the buyback, that's nice. Stock goes up, maybe more. We'll do it, Dan. On the banking side, you showed your 10-year chart. Maybe want to bring that back up with the trend line that you drew. Is the bank stock trade kind of as simple as just watching that 10-year chart?
Well, I don't think it's that simple. I think the one thing that Karen also didn't mention is that there's going to be some very difficult comparisons, and we also have a lot of uncertainty about the reopening. We also know that, while the consumer and their balance sheet are in very good shape right now, we're going to see a lot of, expanded unemployment and stuff roll off in the not so distant future. So Karen said they're optimistic, these CEOs, about loan growth, but it hasn't happened yet. And I just make one point about Citigroup. I mean, that stock trades horribly, and Bank of America too. I mean, but Citigroup's down 15% from those recent highs. It's only up 10% on the year. I think investors were pretty unexcited about both Citigroup and Bank of America, what they had to say about their capital return plans. So to me, it just doesn't seem like a great spot to step in on these groups until we get a little more clarity, and then also until we see what is this market made of, right? We started the show talking about all these different rotations, and bank investors loved when rates were going higher, but now with rates down here, and they're likely to stay down here for the rest of the summer, I'm just not sure. That's to answer your question, what the opportunity is here in the near term.
Well, now you got to do some work, right? Because it was just, rates are going to go up by the bank stocks. Well, now it's not the case. You got to dig in because they are different.
Shepard Smith here. Thanks for watching CNBC on YouTube.